Welcome to Illuminati Silver. We tell the truth about silver. Today is Friday the 17th of December 2021. We're producing our regular morning update, providing prices, news and economic data to be announced. Today we see gold and silver have risen even further as the market begins to accept that despite some action by the Fed increasing the tapering of its bond buying, the reality is that its announcement on Wednesday was more dovish than the headlines gave it credit for. We encapsulated this argument in a video we produced yesterday evening, entitled Gold and Silver Rise After FOMC, BOE and ECB Announcements. And if you haven't had an opportunity to listen to that, we've placed a link in the description box below and in the comments section. So let's now take a look at what has happened overnight and what we can expect for the rest of the day. Welcome to Illuminati Silver. It's Friday, the 17th of December 2021 at 10:11 in the morning, and the weather today is bleak, reminding me of that Christmas carol, In the Bleak Midwinter. Now, admittedly, it's not as gusty, stormy as a typical winter in the United Kingdom, that's for sure. But looking outside, everything is dull, grey, potentially threatening. It's bleak. And it's this bleakness that is repeated in our news today, particularly for the United Kingdom, as Boris Johnson has just suffered, that's the UK Prime Minister for those who are unaware, has just suffered an humiliating defeat in a UK special by-election. We'll take a 20-second look at this. Boris Johnson suffered a seismic political upset as his ruling Conservatives lost a key parliamentary election, a result that will heap intense pressure on the UK Prime Minister and may even call his position into question. The Liberal Democrats capitalised on weeks of turmoil and plummeting poll ratings for Johnson and his Conservative Party to overturn a huge Tory majority and take the North Shropshire seat in the West Midlands that the ruling party has held for almost 2 centuries. There could be major political changes here in the UK. Raising rates yesterday by the Bank of England, admittedly by 0.15%, certainly would not have endeared the voters to the current government. On a positive note, though, South Africa's hospitalisation rate plunges in Omicron wave. South Africa delivered some positive news on the Omicron coronavirus variant on Friday, reporting a much lower rate of hospital admissions and signs that the wave of infections may be peaking. That didn't help house price forecasts from the Halifax being predicted as slowing down. UK house prices probably will struggle to rise in 2022 after 2 strong years of increases, one of the nation's largest mortgage lenders said. Halifax said it expects 1% growth in the cost of an average property next year, after an 8% gain this year and 6% in 2020. Well, yesterday, as we mentioned in our video produced yesterday evening, which we've already covered, we have seen both the European Central Bank, the Bank of England, and the Fed on Wednesday become more hawkish. Perhaps not as hawkish as the media painted them out to be, but more hawkish than many were expecting. And as a result, we can see stocks fall as policy Omicron sap sentiment. Stocks extended declines on Friday amid a drop in global technology shares as concerns about tightening monetary policy and economic risks from the fast-spreading Omicron virus variant sapped sentiment. Central banks globally are prioritizing the fight against elevated inflation by tightening monetary settings while also keeping a wary eye on the impact of Omicron. The backdrop has investors questioning whether global stocks are due for a rougher patch after almost doubling from pandemic lows. Very often, it's the fear of the news rather than the actual news that affects markets. BBC, HSBC fined £64 million for anti-money laundering failings. How often has HSBC and other major banks been found guilty of such a crime? Chancellor cuts short his US trip over COVID concerns. UK signs a free trade deal with Australia. Minister says it will unlock £10.4 billion of trade. But UK farmers have concerns about being undercut. US and Canada. Search warrant issued for Alec Baldwin's phone. Ghislaine Maxwell's team call false memory expert. How billionaires pay less tax than you. Where's the financial here? Dollar index. Dollar's taken a bit of a hit and has fallen below that 96 level. It's now standing at 95.94. Not surprising, as we said in yesterday's video, with the Bank of England raising rates, that will put a little bit of pressure on the dollar. But the ECB coming out, once analysts have really studied it more carefully, coming out rather dovishly in our opinion, we will expect this index to rise. Energy prices, thank goodness, down again by $1, but still with both crude prices, WTI and Brent, resting above $70. Equity markets in the US fell yesterday. Between the Dow almost broke even, but the S&P was down nearly 1% and the Nasdaq down nearly 2.5%. Asia Pacific markets overnight down roughly between 1 and 1.75%. And now this morning, the FTSE is the only market that's up 0.19%. The various euro markets are down between 0.5% and 1%. Economic data today, frankly, is pretty light. And I think that most of the news now affecting markets are going to be the analysis from yesterday's ECB Bank of England announcements and Wednesday's FOMC announcements. We have the New York Fed President John Williams being interviewed and Fed Governor Christopher Waller talking about economic outlook to the Forecasters Club of New York. I don't think that's going to be that interesting, in all honesty, except to people like us who follow these things very closely. We did see yesterday initial jobless claims rise to 206,000 against expectations of 195,000. On the positive front, we found building permits and housing starts rose, but we found the Philadelphia Fed Manufacturing Index literally halve for December. The Industrial Production Index falling considerably compared to October and actually 0.1% below expectations. And the Market Manufacturing Services PMIs lower than November's figures, because they've announced them for December. These are the flash PMIs, and lower than expectations. So not good news there on the economic front. However, because, as we put in our video, what happened with the Fed was more dovish than the markets were initially giving it credit for, we've seen gold prices rise. And now we're above that important $1,800 level, which is what we suggested should happen yesterday. And we now have gold at $1,807. Silver prices too have risen and are up 41 cents at $22.63. If the Omicron variant is not as harmful as many are now starting to predict based on what's happening in South Africa, then we could see a little charge for silver if the forecasted lockdowns don't go ahead. If, however, they do, then we will see silver fall back. So it's at an interesting point at the moment. Cryptocurrency markets down 3% with a market cap of 2.19 trillion. We suspect there's a lot of profit taking going on now, and people expecting Bitcoin to reach 100,000 by the end of December. The harsh reality is that's not going to happen, which is why Bitcoin is now meandering at around $47,000 and $48,000. As mentioned at the start of the video, we produced yesterday 2 videos, our Thursday update, but then gold and silver rise after FOMC, BOE and ECB announcement made. Please listen to that one. We've put a link below. That's it for now. Watch out for our weekly update. It'll probably be published tomorrow afternoon in GMT time, and we will cover in more depth exactly where we think gold and silver prices are going for the end of the year, because now most of the serious economic data is out of the way. Thank you so much for listening. Please give us a thumbs up, subscribe, press the bell sign. Until tomorrow. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.